Yeah, welcome to the Nifty daily view for 9th December 2015. This is the Nifty daily chart. As you can see, the Nifty has been trading in this parallel channel for the last 9-10 months, and today it has given uh, a breakdown from a good trend line support. The trend line support was at 7680 to 7720, where you can see this is if we join the lows of these swing lows, we get this trend line. So some of analysts might argue that this is a head and shoulder breakdown. As you can see, this is the head, shoulder and shoulder, but some of the analysts say that it is not near the top, so it is debatable, but the crux of the matter is that it has broken an important trend line. So if we give a sustained close below this, we might head lower, and the supports on the downside are, first of all, this previous swing low, which is around 7545. So 7500 to 7550 is a immediate support that you can say, which is right now 150 points away, and if it breaks that, then there are more chances of the lower end of the parallel channel getting tested, which is right now at 7250 to 7300. So give and take 50 points, and so this is the support, and the first immediate support what we are looking at is 7500 to 7550. And why 7500 is a crucial support here? Again, it is explained by the option chain. If you see this option chain, 7500 has the highest open interest at 55 lakhs, and obviously 8000 is the highest open interest in calls. So maximum interest is seen in 70, the OI is seen is in 7500, so that will be considered as a good support, and so this is one of the reasons. The other reason is that the previous swing low is there, and if it breaks 7500 to 7550 also, then obviously the next support comes at 7250 to 7300. One thing which the bulls can be hopeful about, no, we cannot say happy, they can be hopeful about, is that there is a you can say a mild positive divergence. Like Nifty has broken this low, but the RSI has not broken this low, so they can be hopeful that if the index makes a first it has to make a reversal candlestick pattern, then only it can go up. So that is a hope that for bulls. And one more thing, if you see, the gaps are very crucial. So this gap was created on 24th August, and it take a lot of time to get filled. So this whole it took time to fill this gap. The same sort of gap has been formed 2 days back. It is not such a huge gap, but it is a gap, and if you see this closely, yes, so this gap has been created, and which was not filled yesterday. So when Nifty gives a breakdown and leaves a gap, so that is now a very crucial reason. So this high 7825 to this low, what you can 7850. So Nifty has to cross this 7825 to 7850, because many people are stuck here. All the index long traders are stuck here because this gap is created and was not filled the next day. So 7825 to 7850 will always act as a good resistance. So till this level holds, you can remain bearish for immediate target of 7500 to 7550. We have initiated a long strangle today because we didn't expect this, honestly didn't expect this trend line to break, which has been broken today. So the long strangle, what it will do is, if it goes below goes to 7500, the put will make you money, and the call, some money will be lost. So overall you will gain. And this one more trend line which was expected uh, to be held on, but it is comfortably broken today. So this also didn't work. And 7680 to 7720 was an important support which has been broken. And if we compare this to again to 2011, you have seen this chart, so this is quite similar to if we go back to 2011. So this is the 2011 chart, and this parallel channel was tested more often in 2011 than right now, so it's a kind of parallel channel. This was three times tested on the lower side, while on the upper side we tested more. So but it created a triple divergence, you can see there. So we will move out from this parallel channel, but how much time it takes, it is difficult to tell. So if we compare this to the current scenario, so that has been tested 3 times on the lower side, almost the third time. So if we see here, so it is possible for the third time, if it tests 7250 7300, that should be the last one. And the rally post that was 20% straight rally in 45 days. So you can expect some wild movements when this channel gets broken out on the upside also. And one more thing, if you see on this chart, yeah, so this is 7250 to 7300. And one more thing is this FI/DI data. So this is the last 1 month data, and this blue is the FI and red one is the DI. So you can see in the last full 1 month only there is one instance where FIs have been buyers, otherwise they have been sellers the whole last month. So this is the effect of FI selling only. And considering that the BSE mid cap and small caps are nowhere near to the 52-week lows, clearly explains that DIs are only nibbling in or buying cash stocks or mid caps and small caps, and while that is going on, FIs are continuing selling. While this period was also going on, if you see the last 1 month, is you can expect from 8th November, yeah, so from here to here, this whole area FIs have been selling this, and DIs have been buying the mid caps and small caps. So this was the period this data is showing, this FI/DI data. So the conclusion is that I'll write the conclusion. Conclusion is Nifty, if the index sustains below the gap 7825 to 7850, then it had headed towards immediate support of 7500 to 7550, and it can also fall to 7250 to 7300 coming sessions. So this is the conclusion. With Fed meet next week, you can expect anything. So even 7250 to 7300 is possible. If Nifty has to like a rally from here, then obviously 7825 to 7850 has to be crossed, and this breakdown has to be failed. It has to be the rally will be the result of the failure of this breakdown, and the rally will be sharp. So you will get to know. Our guess is that 7500 to 7550 should come at least. Thank you.